Bank of Canada this morning dropping rates by a quarter point to make the overnight rate 2.25%. This move by the Bank of Canada amid clear signs of a struggling Canadian economy, from rising unemployment, persistent and stubborn inflation, and a weakening economy from all the statistics that are coming out. According to an information drop by Statistics Canada in August, the Canadian economy shrunk by 1.6%. And this shrink in the exports to the United States is only marginally offset by increased trade throughout Canada, but it's still a significant blow to the Canadian economy, shrinking by a very large margin. And meanwhile, inflation is still persistent and not cooling off. Canada's inflation rate pegged at 2.4% according to recent data drops, and core inflation, the items that are more staple type items, are up by 3%. Everyday Canadians are feeling it as well. Coffee and tea up by 15%. Sugar and confectionaries up by 3%. Now, compounding all these issues, of course, is the facade of trade problems with the United States, especially given the Ford government's recent attack ad on Trump and the recent deals being signed by Japan and the United States for raw minerals. Of course, the reason I say this is a facade is because the real issue is not Trump. The real issue is the inherent weakness driven by government policy over the last decade for sure, but 30 to 40 years over the long run. Our manufacturing was hollowed out long before Stellantis just made their announcement over the last week to 10 days on moving their Jeep Compass production back into the United States out of Brampton, Ontario, and other companies taking their business elsewhere outside of Canada. Unemployment remains very persistent at 7.1%, and youth unemployment is north of 15%. All of this during a time that the Canadian dollar is weakening against all other major currencies since the beginning of the year. Meanwhile, Canadians are bracing for the largest deficit in Canadian history that will be tabled on November 4th in the House of Commons. With the Canadian economy being hollowed out over the last decade by bad government policy, we're not expecting a rosy picture coming out in this year's budget. And although the Bank of Canada would like to get you to think that they're managing the Canadian economy, there's really nobody managing the Canadian economy, nor should there be anybody managing the Canadian economy. That should be driven by entrepreneurs who are building and expanding their companies in an environment and an economy that needs to be unfettered by bad government policy and allowed for entrepreneurs to invest, expand, and hire more people. We will be expecting the U.S. Federal Reserve to also make a similar type of cut by at least 0.25% when they make their announcement at 2 p.m. Eastern later today. If you found this video to be helpful in trying to decipher what the heck the Bank of Canada is trying to do, make sure you hit like, subscribe, and hit that notification bell for upcoming videos.